Yes, to everyone. Greetings to everyone. Today, I want us to look at accounting grade 12 term 1 revision. This is where I want us to be today. So we are going to make a revision of 2025 term 1. So that is that. So we are going to do the activities to help us to prepare for the term 1 that you're going to sit on. So let us move on. So like I've said, we are going to do the activities to prepare ourselves on accounting grade 12. So without wasting much time, let us go straight to the activity 1. So let us be on activity 1. So activity 1 is all about the buyback of shares. It's all about the buyback of shares. So on that, we are going to do calculations, ledger and notes to financial statements. So this is what we are going to do. So one would like to know, what is this buyback of shares? So the buyback of shares happens when a company repurchases its own shares from shareholders. Get me straight, good people. It happens when a company repurchases its own shares from shareholders. And this reduces the number of shares in issue and may increase the value of the remaining shares. Hope we are together on that. So like it says, you are going to make calculations even on leisure. We know very well when you're talking about ledger, a ledger is the main book of accounts where all financial transactions are recorded under individual accounts. For example, we can talk of cash account, sales account, capital account. That is that. So this happens after being transferred from the journal, and it shows the balances of each account. So now we have also notes to financial statements. So notes to financial statement is just an extra explanations and details that support figures shown in the financial statements. That is how short it is. And this helps us to understand how amounts were calculated and give important additional information. So this is what we're going to do on this activity. So let us carry on. It says the information below relates to BAC Ltd and their financial year ends on 28 February 2020. So here is the question. Show the following calculations and entries in your answer book. Meaning, whatever the results, the answer that you're going to come up with, we must show the calculations. Very important. So 1.1. So before we even can go to 1.1, there is information that is given below there, as you can see. But let's start by those questions quickly. As it says, 1.1, show the calculations of the average share price before the buyback of shares on 1 March 2019. 1.2, show the required calculations for the buyback of shares on 1 June 2019. There on 1.1, we're calculating what the average share price. But 1.2, we are to show the required calculations for the buyback of shares. 1.3, calculate the average share price, net asset value per share after the repurchase of the share on the 28th February 2020. 1.4, show the necessary entries in the ledger for the year ending 28 February 2020. And the last 1.5 complete the retained income note on the 28th February 2020. So there is information that is given there that we are going to work on when we do our calculations. We have balances on 1st March 2019, whereby we are having ordinary share capital of 4,500,000 and issued share capital of 750,000. We also have retained income of 1,200,000 and the bank is 1,100,000, which we are to debit it. So on the 1st June 2019, the directors decided to pay 800,000 for the buyback of how many shares? 100,000 shares. 28th February 2028, our net profit before tax is 1,300,000. Income tax is 390,000 and dividend declared and paid is 260,000. So this is the information that we are given and this is the information that you're going to work on it. So let us go back to our 1.1. Our 1.1 says show calculations of the average share price. Average share price before the buyback of shares on the 1st March 2019. So what is this average share price that you're going to calculate? The average share price, good people, is the total value of shares divided by the number of shares in issue. Get me straight. The total value of shares divided by the number of shares in issue. This is what you're going to calculate. So there we are. There we are, good people. So we are on 1.1, where we are asked to calculate what the average share price before the buyback of shares. So meaning to say we are going to say average, we are going to say average share price before the buyback of shares, before the buyback, before the buyback of shares. So it says on the 1st March 2019. So the periods are very important. 1st March 2019. So this is what you're going to do. So now we have to show what calculation. Calculation. Like I've said, the average price is what? Total number of shares divided by the number of shares in issue. So let me write it. Total number of shares, total number of shares divided now by number of shares in issue. Number of shares in issue. So that is that. This is our formula for us to get what? To get the average share price. So now the total number of of shares, that's when you're talking about the ordinary share capital. Where is our ordinary share capital on the 1st of March? Here is our ordinary share capital, 4,500,000 divided by the number of shares in issue. So the number of shares that were issued is what? 750,000. So meaning to say, we are going to say, we are going to say 4,500,000 divided by 750,000 number of shares in issue. Then we are going to get our average share price. So meaning to say our average share price is 6 rand. Average share price is before buyback. Let us not forget that before buyback equals to 6 rand per share. So that is that. That is the answer for question 1.1. So we just said a total number of shares divided by number of shares in issue. Then they give us what? The average price of 6 rand per share. Hope we understand. So let us go to 1.2 now. So now we are on 1.2. Let us go to the question for 1.2. Question for 1.2 says, show the required calculation for the buyback of shares on the 1st June 2019. Here we are, 1.2. We are done with 1.1. Show the required calculation for the buyback of the shares on the 1st June 2019. So here is our 1st of June 2019, which says the directors decided to pay 800,000 for the buyback of shares, for the buyback of 100,000 shares. So here we're going to talk about what? Buy a back of shares. Buyback of shares. This is where we are. So before we can get to that buyback of shares, let us have the information that will make it easy for us. Let us have the information that will make it easy for us to calculate our buyback of shares. So first, we have shares bought we have shares bought back. How many shares were bought back? 100,000 shares. So we write 100,000 shares. Amount paid for those shares. Amount paid. Amount paid is how much? 800,000. 800,000. Here is our 800,000. Average share price before buyback. Average price before buyback. So the average share price before buyback is what? 6 rand. So this is the information that we are having now for us to now calculate our buyback of shares. So that is that. So now let us start with the first step to calculate that. So let us start with the first step. So we are going to say step 1. So on our step 1, we are going to calculate what? Cost at average share price. Cost at average price. What is our average price? Our average price is what? Is 6 rand. So we are going to say cost at average share price. Cost at average share price. That is that. So how many shares were bought back? 100,000 shares multiplied by 6 rand per share. 6 rand per share. And this is going to be 600,000. 600,000. So there we are. That is our step 1. Now we come to step 2. On step 2 now, we are going to do what we call excess paid. Excess paid, which is from retained income. Which is from retained income. So we say it's an excess paid because we were told that directors paid this much, 800,000 for the buyback of 100,000 shares. But when we do our cost at average share price, we happen to get what? 600,000. So it means this 600,000 is the one that is the amount that we use to buy what? To buy back what? Shares, which is the amount that is going to reduce our ordinary share capital. It's going to reduce our ordinary share capital. So for us to calculate this excess paid, which we are saying is from retained income now, we are going to say 800,000 minus 600,000 for us to get the excess paid, and then it is going to give us 200,000. So that is our 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 excess amount, which we are saying it is straight from retained income. That is that. So we can even make a breakdown of this. We can even make a breakdown of it, of this. We can say now ordinary share capital. Ordinary share capital is equal to 600,000, and say retained income is equal to 200,000. That is that excess that you're talking about. But the 600 that you're talking about is the one that you are saying we bought the shares back with it, which we are even saying is going to reduce our share capital. So hope you are together with people. So now we are moving on. We are moving on to 1.3. We are moving on to 1.3 now. So our 1.3 is all about calculate the average share price and net value assets per share after the repurchase of the shares on the 28th February 2020. So we are going to calculate what? The average share price and net asset value on 1.3. So 1.3, that's what you're going to do. So that's what we are going to do on 1.3. So here we are on 1.3, where we are asked 1.3 is whereby we are going to calculate average share price and net value asset per share after the buyback on the 28th February 2020. So we are mainly going to calculate what? Average share price and net asset value per share after buying back the buyback of shares on the 28th Feb 2020. So this is what we are going to do. So first, we are going to start with our step one. We're going to start with our step one. So for us to calculate this, we are first going to start by the net asset value per share. We are first going to look at net asset value per share. So for us to do that, we are going to now want the new number of shares in issue. New number of shares in issue. So for us to get the new number of shares in issue, we are going to look at the shares that were issued on the 1st March 2019. So as you can see, here are the shares that I'm talking about. The shares that were issued on the 1st March 2019, 750,000. So we're going to say 750,000 minus the buyback of shares. And the buyback of shares is what? 100,000 shares. So the buyback of shares, if I can come back, we are talking about these shares. We are talking about these shares, the buyback of shares. So we are going to say 750,000, the shares that we issued. So it means we are going to say 750,000, the shares that we issued, minus the shares that we bought back. And this will give us what? The new number of shares in issue, which is 650,000 shares. 650,000 shares. That is our step one. Then we come to step two. Step two, now we are going to want what? Ordinary share capital. Remember, step one, we're looking for new number of shares. Now we are going to look at ordinary share capital. So now we are first going to say the ordinary share capital before the buyback was what? 4,500,000. So minus now the 600,000 that we bought the shares back by. So 600,000. That is the one for buying back of shares. That is the amount that you used to buy back shares. This is the amount that you used to buy back shares. So for us to get the ordinary share capital, remember we have said this 600,000 is going to reduce our ordinary share capital because now we have paid to buy the back to return our shares back to the business. So that is where we are to subtract it from our ordinary share capital that we have invested in. So that is the reason why we are to subtract 600 from 4,500,000. It's because it reduces our ordinary share capital because we bought the shares, we paid for shares to bring back our shares. So that is that. So now the answer is going to be 3,900,000. 3,900,000. So that is that. Also, we are to calculate what retained income. Remember, we are still doing calculations for us to get to our net asset value per share. So here we are on retained income, only retained income. So we are first going to start by the balance brought down of our retained income. If we are going to get it on the 1st March 2019, which is 1,200,000. So we are going to write it here. So here we are. We're going to have 1,200,000. Let me write it. We're going to have what? 1,200,000 as our retained income. Also, we have a retained income that we use to purchase or we use to buy back the shares. If you remember very well when I was talking about that excess paid, here we are. The excess paid, remember we have said it's what? 200,000. this was taken from retained income to buy back what shares, because this 200,000 was added to 600,000. That is why we're told that we paid for this 100,000 shares by 800,000. So it means this 800,000 was containing this 200 excess. So now, as we are calculating our retained income, now we are going to say, um, I'm going to say minus 200,000, because we are saying minus because you've used this money to buy back shares. So anything that reduces what retained income it decreases, it affects our retained income, because now we have taken 200,000 to buy back shares with this amount. So that is why we are going to subtract it. So also we have what? Dividends. We do have what? Dividends. If you can go back to our information, there we have dividends. Dividends declared and paid. So this do reduce what? Our retained income, because you're going to pay our shareholders. After we have realized our profit, now we're going to pay our shareholders what? Their dividends. So it means we are going to subtract it as well, because it's going to reduce our retained income. Hope you're together. So we are going to say minus 260,000. So it also reduces what? Our retained income. Also, we are going to have what? Net profit. We are going to have what? Net profit. So if you can go to our information there, you can see now, here we are on the 28th February 2020. Here is our net profit before tax, which is 1.3 million thousand. 1.3 1,300,000, sorry. And then we have income tax for the year. So meaning to say we are going to say 1,300,000 minus now 390,000. So which is going to give us 910,000. So this 910,000, now we're going to write there on our calculation for retained income. But this one we are going to edit the profit 910,000. 910,000, which we say is our net profit. So now when we calculate all this, we are going to get 1,650,000. 1,650,000. So that's that. Hope we are together. So now we are on step 3 now. We are now on step 3. So remember, we want what? Net asset value. We want net asset value. We want net asset value. So now we are going to say, for us to calculate the net asset, you're going to say net asset. We're going to have net assets, wherever we say is equal to, you're going to add what? Our 3,900,000, that one of ordinary share capital. 3,900,000 plus our retained income, which is this one, which is 1,650,000. And this will give us 5,550,000. So therefore, we're going to say our net asset value per share, sorry, per share, is equal to 5,550,000, which is 3,900,000 plus 1,650,000. So we divide it by 650,000. Where did we get this 650,000? So we are dividing it by 650,000 that we calculated of shares, new number of shares, new number of shares. So that is that. So the answer will be 8 rand 54 cents per share. So that is that. So this is the answer for net value net assets value per share. So this is the answer. This is how we come to this answer. So we were also asked to do what? To calculate the average price. Remember that we were also asked to calculate average share price after buyback. After buyback. So for us to calculate the average share price, remember we have said it. We said it earlier on when we started this presentation that that is the total number of shares divided by the number of shares in issue. So now we are going to say ordinary share after buyback divided by the number of shares in issue after buyback. Get me straight. So meaning to say we're going to say 3,900,000 divided by 650,000. 3,900,000 is our ordinary share capital after the buyback. Remember, we have subtracted the ordinary share capital that we invested in the 1st March 2019, and then we subtract the 600,000, the one that we used to buy back the shares, because you've said it decreases what our ordinary share capital. That's when we come up with this amount, 3,900,000. So now we subtract it from the new number of shares, which is 650,000. Remember how we get this 650,000? We get this 650,000 when we subtracted our when we subtracted our 750, we said 750,000 number of shares in issue. We subtract which amount to it? We subtract 100,000 shares which were bought back. That's when we came up with 650,000. So how? Then we get, the answer for that is what? 6 rand per share. The answer here is 6 rand per share. That is our average share price after the buyback. So that is all about 1.3. So now we have to move on to 1.4. Now we are to move on to 1.4. We are to move on to 1.4. 1.4. Point four. So that's that. So let's quickly attend to 1.4. Let's quickly attend to 1.4. So let us go to our information. So here we are on our activity 1.4. It says show the necessary entries in the general ledger for the year ending 28 February 2020. So here we are to do what? The ledger accounts. So here we are to do what? The ledger accounts. So we are first going to start with ordinary share capital. We are first going to start with ordinary share capital. So we're going to write 1.4. We're first going to start with ordinary share capital. So we are completing what the ledger accounts for the year ending 28 February 2020. So that is that. We are saying the ledger, the ledger accounts, the ledger accounts, the ledger accounts for the year ending, for the year ending 28 February 2020. So that is that. So you're going to start with ordinary share capital. Ordinary share capital. So that is the first account that you're going to start with. Ordinary share capital. Ordinary share capital. So here we are. So we know very well that ordinary share capital is an equity account. So the equity accounts have credit balance. The equity accounts have what? Credit balance. So that is that. So we are first going to say 2019 March. 2019 March, and then we write what? Balance. What is the balance for ordinary share capital? As you are saying, it has what? Credit balance. So the balance for ordinary share capital is 4,500,000. That is that amount that we first invested into our business. That total number of shares that we invested into our business. So that is what? 4,500,000. So that is that. So that is that. So we know that we also have 600,000 that we used to buy back shares. The 600,000 that we used to buy back shares, that we have said that is going to reduce the ordinary share capital. So we are going to say here 2019, June 1, we are going to have CPJ, cash payment journal of 600,000. So that is that. So we are saying cash payment journal because we have paid this 600,000 to buy back shares. That is why it is on the debit balance. It is on the debit side because it does reduce our ordinary share capital. So that is that because it's going to decrease our ordinary share capital. So that is how easy you are to do it. So now we're going to say 4 million minus 600,000, and then we're going to get what? 3,900,000, the one that you have seen. So now let us go straight to another account, whereby now we're going to do what? Retained income. Retained income account. Retained income account. So retained income as well, it's what? It is an equity account. It also have what? Credit balance. So we know very well that the balance that we have started it with, or our balance brought down, was how much? 1,200,000. So you're going to say 2019 March, and then we say balance, and then we have what? 1,200,000. So the 1,200,000, it is there on the 1st March 2019. It's there on the 1st March 2019. We have been 1,200,000 that we started with under retained income. So moving on, still under retained income, we are going to have on this side 2019 June 1, whereby we are going to have now premium, or we can say we're going to have bank. That is when you're talking about the premium on buyback shares. So remember, we're having those excess amount, that 200,000 that we've been talking about, the 200,000, that excess amount, this 200,000 that we even subtracted it here when we're calculating retained income. I'm talking of this amount. So now we're going to put it here on the debit side, 200,000. So we know very well that anything that uses profits reduces retained income. So for that matter, we are going to debit it. That is why it is on the debit side of our retained income. We'll be together on that. So remember also under retained income, we have what? 1,650,000. So I'm talking of this amount, 1,650,000, of which this amount is our balance brought forward for the next financial year. But to balance our retained income, we are going to put it here on the debit side of our retained income. We are just going to say 2020 Feb 20 2020 February 28. Then we have balance now, which is that, and then we write what? 1,650,000. Then we can now balance what? We can now balance our account. We can now balance our account. So here we are. So we can now say, we can now balance our account, whereby when we add these two, 200,000 with 1,650,000, we're going to get 1,850,000. 1,850,000. So now subtracting 1.2, 1,200,000, then we're going to get appropriation of, we are going to get appropriation account of how much? Of 650,000. Of 650,000. So that's all about retained income account. So now let's quickly come to the bank account now. Now we are on bank account. So let me write it here in the middle. We are now on bank account. So with bank now, I'll just want us to go back to the questions so as to see the balance brought down of the bank. So we know bank is it is an asset. It has what? It has a debit balance. So I want us to go through the questions so as to see where are we going to get the amount. Where are we going to get that amount, our balance brought down? So here we are on our information. So here is our bank, as we can see, 1,100,000. It is even written in bracket that it is in the debit balance. So the retained income that we did, you see the balance is here, 1,200,000. So if in the ordinary share capital that we did, you can see the balance brought on was 4,400,000. We started with that. So those are the balances on the 1st March. So now as we are on bank, we are going to start with 1,100,000 on debit side. So let us go and uh, record it. But before we can even go and record it, this is going to be on the debit side of our bank. But on the credit side, because you're going to receive this much, but on the credit side, whereby now we are going to pay, we are going to have ordinary share capital as well as retained income. So those amounts will show that we have given out or we have taken out the cash because ordinary share capital, remember, we have paid 600,000 to buy back shares. Also remember, we have bought the shares back with 200,000, that excess amount. So let us go there and then we'll see how we are going to record this. Let us go straight to our bank account. So here we are on our bank account. Like we've said, on the bank account, we are going to have 2019 March. Let me see. Going to have 2019, and then you have March 1. So we are going to have what balance brought down. Balance BD of how much? 1,100,000. 1,100,000, which we were told that it is on the debit side. So this is the money that we received. But we also paid by bank on 2019 June 1. So we are going to have what? Ordinary share capital of how much? 600,000. Remember, we bought the shares back by 600,000. So we take out what? The money out of our bank of 600,000. Also, we also have what? Retained income. Retained income. Remember, with retained income, this is the excess of 200,000. 200,000, which we were told that it was taken from our retained income. You remember, if you can say 600,000 plus 200,000, it will give us the 800,000 that we were told that the directors paid that much to buy back shares of 100,000 shares, if you can still remember. So that is our bank account. That is our bank account. Also, you're going to do what? Appropriation account. We are now going to do appropriation account. We are on appropriation account. So with appropriation account, we are first going to start by profit and loss. So we are going to say on this 2020, Feb 28, we have profit and loss. We have profit and loss of how much? 1,300,000. We are talking about that profit, net profit before tax. That is this 1,300,000. Also, there is an income tax. If you can go back to the information of on the 28th February 2020. There you can get income tax is there. So we are going to say 2020 Feb 28. So we have income tax of how much? Of 390,000. Of 390,000. That is our income tax. So it is on the debit side to show that these are what the expenses that the business is incurring. These are the expenses that the business is incurring, like dividends now. Dividends. Because dividends are going to reduce our profit. Dividends on ordinary shares of how much? 260,000. So also these are business expenses. We also have retained income. Retained income of 650, sorry, 650,000. This is our retained income of 650,000. Where did we get this 650,000 from of retained income? So this is here, as you can see, this is the 650,000 under retained income. So we are told that the business appropriated this amount. So it means they paid 650,000 as it is. They took money out, this money out of the business. That is why it becomes an expense, or that is why now we are treating it on the debit side of our appropriation account. It is because we are told that with this retained income, the income that we have here, we appropriated this one. So it means we took out this 650. That is why now we are to treat it under appropriation account on the debit side of it. So that is that. Hope you're together on that. So now we are to add them. As you can see here, we are going to have 1,300,000. And when you add the 390,000, 260,000, as well as 650,000, you're still going to get 1,300,000. So that is that. Hope you're together on that. So we are now to go to question 1.5. As we are on 1.4, now we are to attend to 1.5. So let us go to questions and try to see and get to what question 1.5 wants. So here we are on our information. So here we are. So here we are. So 1.5, complete the retained income note. Complete the retained income note on 28 February 2020. We are done with the leisure. Now we have to do what? Retained income note on 28 February 2020. So let's quickly do it. Let's quickly do the retained income. So before we can even go there, when we do our retained income, we are first going to start with the balance at the beginning of the year, 1st March 2019. What is that balance on the retained income? That balance is the 1,200,000. That is the balance we're going to start. From there, we are going to do what? We are going to add net profit. How much is our net profit? How much is our net profit? So our net profit is 910,000. 910,000. 110,000. So let me quickly show it right here. Our retained income 1.5. So we are going to first say balance. Sorry, let me write it well. To say retained income 1.5 retained income. So that is that. So we are going to say balance at the beginning. Balance at the beginning of the year. Balance at the beginning of the year. We're talking of the 1st March 2019. So how much was the balance? 1,200,000. This is the amount that we're talking about. 1,200,000. Then we're going to add net profit on that. Net profit. We are saying net profit. It means we have already subtracted what income tax. So we're talking about this net profit. 910,000. And then you're going to talk about the repurchase of ordinary share. Repurchase of 100,000 shares, 100,000 ordinary shares. So remember, we repurchase 100,000 shares with how much? 800,000. So we want that excess that we're talking about, the 200 excess. So we are going to say 200,000. So you remember where these 200,000 come from. That was when we were saying 800,000, which is this one, minus 600,000 that we calculated when we were looking for the average cost. So we are going to say 200,000. So we are subtracting it because it reduces what? Our retained income, because this amount was used to buy the shares back. Also, now we have what? Dividends of how much? 260,000. So the dividends, like they're putting them in the bracket, it shows we are going to as well subtract it. So how much you're going to get for our retained income note is 1,650, 1,650,000. So that is that. So this is the end of this presentation. So grade 12, make use of this presentation. It is very helpful. It will help you to make sure that you are not going to find it difficult for you to sit for your term 1 test. Thank you very much for your time. Make sure that you are going to share with others, and please don't forget to hit the subscription button. I thank you.